Hey everyone, it's Josh from JoshLM Finance. Let's talk about what might be the most powerful and maybe the most dangerous piece of plastic you can have in your wallet, the credit card. You know, if you get it right, it can unlock a whole world of financial opportunities. But if you get it wrong, it can become a real trap. So in this first part of our three-part series, we are breaking down the absolute essentials. Doesn't matter if you're in Lagos or Los Angeles, by the end of this, you'll get exactly how to make a credit card work for you, not against you. Let's jump.
Okay, first things first, let's just clear up the single biggest point of confusion. A debit card, that uses your money. It comes straight out of your bank account. A credit card, on the other hand, uses the bank's money. It's a loan, plain and simple, that you have to pay back. And that one single difference, well, it changes everything about how you should think about and use these cards.
So, okay, it's the bank's money, but what does that actually mean in practice? Let's look at the official definition for a second, because the words they use here are actually pretty important.
Now, what's really key here is how this frames the card as a tool. You see that? It's not free money. It's a device for borrowing funds up to a specific limit that the bank sets for you. The best way to think of it is like a flexible, pre-approved loan that just happens to live in your pocket.
Every single credit card out there, I don't care if it's a basic student card or one of those fancy premium travel cards, they all play by the same three fundamental rules. If you can master these three concepts, I promise you, you will always be in control. So let's break them down.
First up is the credit limit. This is basically your spending ceiling. It's the absolute maximum amount the bank is willing to let you borrow at any one time. And hey, quick pro tip here, just because they give you a $5,000 limit, that does not mean you should go out and spend $5,000. In fact, staying well below your limit is a huge factor in building a strong credit score, but we'll talk more about that a little later. Next, we've got the billing cycle. So every month, the bank adds up all your purchases and sends you a bill, or a statement. Now, here is the most important part of the whole deal. If you pay that full balance by the due date, you pay exactly 0 interest. You've essentially just gotten yourself a free short-term loan for a month. That's the magic.
But what happens if you can't pay that bill in full? Well, that's where the bank makes its money. The annual percentage rate, or APR, that's the price you pay for borrowing. This is the number that can turn a small, forgotten purchase into a long-term debt if you're not paying attention.
So, with all these rules and this risk of super high interest, you might be sitting there asking, Josh, why on earth would I even get a credit card? And you know what? That is a totally fair question. The answer is because when you use it the right way, it is one of the most powerful tools you have for building wealth. Let me show you exactly why. Here it is. This is the #1 reason to use a credit card and use it responsibly. To build a positive credit history. And this is just as critical in Nigeria as it is in the US. Having a good, long track record of borrowing money and then paying it back on time, that is financial gold. And why is that financial gold so valuable? Well, because it unlocks all the major financial milestones in your life. A good credit score proves to lenders that you're a responsible borrower. That means when you need a loan for a car, or a mortgage for a house, or even just a better deal on a phone plan, you're going to get the best rates. It can literally save you thousands, even tens of thousands of dollars over your lifetime. All right, so you're convinced. You see the advantage. Now the question is, how do you actually get one? Let's walk through a simple, practical game plan to get your very first card.
Here's your 4-step plan. First, you've got to know where you stand. So in the US, that means checking your FICO score. In Nigeria, it's a bit different. It's more about your relationship and history with your current bank. After that, you compare different offers, you submit an application, which is usually pretty quick online, and if you're approved, you activate the card, and you're good to go.
But wait, before you make that first swipe with your new card, please take this advice seriously. You have to always read the fine print. I mean it. You need to know all the little details about annual fees, what the penalties are for paying late, and exactly what your interest rate is. This step is absolutely non-negotiable.
Okay, on to our final section. Look, knowing how to use a tool is one thing, but knowing how not to misuse it is just as important. So let's cover the common mistakes that can turn this powerful financial tool into a really nasty financial trap.
So let me just ask you directly, what do you think the biggest risk here really is? It's not about a single late fee. No, the real danger is so much bigger than that, and it's the kind of thing that just creeps up on you.
These 3 things right here, this is the danger zone. Carrying a high balance from month to month just means you're constantly throwing money away on interest. Paying only the minimum amount, that is a total trap. It can take you years, sometimes decades, to pay off your debt that way. And missing due dates, that directly damages your credit score. Every single one of these habits is incredibly costly. And to put a number on it, just look at this. An APR of 25% or even higher is not that uncommon. And when you're carrying a balance with an interest rate like that, that interest compounds, and your debt can snowball out of control so much faster than you think. This right here is how people get into really serious financial trouble.
So that's part one. We've covered what a credit card is, how it works, why it's so important, and how to get one the right way. But this all leads to the most practical, everyday question of all. You've got both the credit card and a debit card in your wallet. Which one should you actually pull out to pay, and when? Well, that is exactly what we are breaking down in part two.
If this helped you, if you finally understand the difference between APR and your credit limit, do me a favor and hit that subscribe button. This channel is building a growing library of clear, step-by-step money explainers you can always come back to. And please share this with someone who needs this breakdown. Thanks so much for watching, and I'll see you in part two.